Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Welcome to the Talking Real Money Sunday edition. I'm Don, and we just not long ago had Fiduciary Friday. That's when the fiduciary rule of the Labor Department went into pseudo effect. And we'll talk a little bit later about how that might affect your investments in the future. Also, a lot of people have been asking, what if the market crashes? What do I do then? Well, at some point, stock prices will fall. For the market to go to zero, the entire global economy needs to collapse. And if the entire global economy collapses, well, are you really going to care a lot about the value of your investment portfolio? However, there is something you're going to care a lot about. So, Tom, how much do you spend on groceries a year?
Just like real groceries?
No, groceries, groceries,
wow.
Buying food for the house.
You know, I would probably say, because it's just three of us, really, basically.
Mm-hmm. Yeah, right.
It's probably $150 a week. That's a guess.
A week times 50. Oh, this will be a better deal for you.
Okay.
This
is the year supply of stuff from Costco. I don't know if I have a storage room, but okay.
Right now, Costco has 1 year of food. For 4 people. This means you can eat a little extra. You give them,
which I don't need to do, but okay.
You give your wife and child the smaller rations. You take the bigger ration.
Well, if the world's ending, then I don't care so much.
Or you can extend it for 3 months. You get 15 months.
All right, I feel better all over.
15 months of food for a family of 3. Normally $59.99.
Oh, okay.
On sale for $49.99 for a limited time only until June 25th. So 2 pallets will arrive at your house.
Good Lord.
You just slide them into the garage.
Yeah.
They don't have to be refrigerated.
So this is like freeze-dried food?
Freeze-dried food, some of which has a 30-year shelf life.
Which is longer than mine.
Almost as long as Twinkies. That's almost as long as Twinkies.
It will survive me, then, no doubt. Yeah, okay.
It will survive nuclear war.
Well, this is really comforting, I tell you. So, is there anything else you want to throw out there?
No, I'm shocked at how cheap it is to eat for a year.
Yeah.
I'm going to order the 2 pallets in and tell Debbie this is what we're having for the next 2 years. You got to find
your way through there. There's no stopping at the store for anything else. That's a pretty interesting idea. You got a budget right there. You're all set. Wow.
Yeah, you got fruits, you got veggies, you got beef and chicken. Beef and chicken, freeze-dried.
I've had it because I was in the Boy Scouts, but I wouldn't recommend it in the long term.
Now, all you have to do is buy the several hundred gallons of freeze-dried water.
You got to have the water, yeah. Freeze-dried water. You got to add water to have water.
Add water to get water.
Yeah, that's good.
Well, we're trying to help.
There was a guy, because somebody was in the office today. Rogers, I don't know him.
Mister?
That's what I said. He's on CNBC, and he says we're headed for the biggest crash ever in the history of crashes, and he's a very well-known investor, and he's somebody that you need to listen to.
Jim Rogers?
I believe it was Jim Rogers, yeah.
Jim Rogers was in our office?
No, someone was in our office telling me about him this morning.
Oh, yeah. Jim Rogers, he's like Perma-Bear Boy.
Yeah, well, he's really off the deep bear end this time because he's saying big crash coming soon, and it's going to be whambo, Rambo. So
I interviewed Jim Rogers in the
Is that
late
why he's so
80s,
negative?
early 90s, and he has always said that a terrible crash is coming.
And so this is a great learning opportunity because the person in our office today was saying, so how do I respond to that? Should I be more conservative? Well, A, Jim Rogers doesn't know, but B, here's the important thing. You should always be prepared for that. Your portfolio should always be prepared for the upside and the downside. It should be balanced between riskier things like stocks and less risky things like bonds. Always. The end may be, the big crash might start on Friday because we had all the tech stocks that got beat up, but your portfolio should be built for what you need to make and how much volatility you can handle. That's it. Shouldn't matter what Mr. Rogers has to say. I love the sweaters, by the way.
is known in the industry as what is called a, quote, perma-bear.
Yes, which
These
means
are the
what?
guys, there are hundreds, if not thousands of them.
There's the guy in Montana that I hear from
who
all the time.
believe the financial end is nigh any day now, and they know that if they keep saying it long enough, they'll look brilliant because the press will have forgotten the 17 years that they were wrong and only remember that one time they said it was going to happen and then it did.
And who's the potato chip guy from California? I always forget his name. Written about 10 books. The demographics, he said market was going to crash.
Dent? Harry Dent is
Harry
a potato chip guy?
That was one of his things. That the number of potato chip sales are going down. That means the market's going to crash because the demographics. I don't know.
One of his demographic indicators.
Yeah, that was the potato chip.
Yeah, okay.
Sales
Well,
of
here's
potato
what
chip.
Harry Dent does.
Yeah.
Harry Dent writes books that are always wrong. Right before the market goes up, he says it's going to go down.
Yeah.
Right before the market plunges, he says it's getting ready to just go crazy and go up. Harry Dent is one of the most wrong people on the history of the planet, and yet he is continually a best-selling author.
I know.
What does that tell you about the intelligence of our fellow Americans?
No, we want to be led. We want to find somebody who's going to tell us what the future looks like. We're always looking for the guru.
Even if he's always
it doesn't
wrong?
matter. I want somebody to tell me when to cross the street, how fast to go. I don't care if the traffic's coming on. I want somebody to help me do it. Which, by the way,
doesn't that frighten you a little bit? Doesn't that sound a little like the thing that led to, I don't know, Julius Caesar, Adolf Hitler?
We're going to go back to this because, believe it or not, this all ties back into where you started the program with Fiduciary Day. It really does.
I got to tell you, I am way, way, way impressed with your ability.
I know. This is a spin.
Through all of that,
this is one of the
drag
biggest.
us back around to the original concept of the program.
And when we do, you will be so impressed as to where I landed. How I landed there, I have no idea, but
you're
we
a
got.
True professional.
I don't know.
Ray, welcome to Talking Real Money.
Hey, Ray, how can we help you?
Hi, thanks for taking my call. I'm 67 years old and retired. My wife and I have saved a pretty good amount of money, which is been invested in different ways. But I've been listening to you talk about investing in no-load total market index funds. And I'm wondering, as a retired person, whether you would recommend that for my wife and I.
Yes, but let me explain.
Well, that was easy, and thanks for the call.
But let me explain why, okay? Because what I get the sense you're saying, well, should we use mutual funds that have stocks in it because they're risky? I want to get to the details, but the vehicle of no-load, low-cost index funds, everybody should be using those. We'll talk about that in a minute.
Yeah, okay, then we'll just take a couple of seconds. Let Tom actually figure out what that important thing is, and then he'll share it with you after the break.
Tom and Don are talking real money.
Quick break. In addition to our Talking Real Money podcast, we have a few other tools to help you gain a better understanding of the concept of real investing. Of course, there's Real Investing Journal. That's offered in both a free online version and in an inexpensive printed magazine. Explore both those options at realinvestingjournal.com, realinvestingjournal.com. Then we teach classes. We offer most of our live classes in the Seattle area because that's where most of our offices are, but most of you live elsewhere. That's why we're now offering the same classes that Tom and I taught at Retire Meet online right now, free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com and then click on the video link. You'll see them right there. Finally, we also manage the wealth or the budding wealth of hundreds of folks like you through our fee-only 100% fiduciary investment advisory firm, Vestory. You'll find our approach is consistent with the message we've been sharing for decades. We always put our clients' needs first. Our fees are among the lowest of any non-robo advisor, and constant education is one of our core values. Visit Vestory.com for more information on our firm and to take our free no-obligation risk quiz to better understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
because it's really, truly important that you get your head around the concept of real investing. It's one of the few ways, other than just working, and you probably won't be able to work your whole life, that you're going to be able to build wealth. And right now, Ray asks, what about this just going out and buying no load, the whole market funds? And Tom has a brilliant answer.
No, I don't want to get brilliant. So where is your money today? Where is it held? What funds do you own at this point?
We have a financial advisor. He's got a 3-bucket system going, and recently he's decided to pull out of the market because of fears, and I'm wondering if that's a good decision.
This is not a very good advisor.
Right,
okay.
And if I leave him, should I be going to the total index fund?
Okay, so...
Does he have a crystal ball or one of those puffy psychic hats?
Sure, no, of course not.
Yeah. So, but does he have a market timing system, or is this just he woke up one day and said, I don't like the way things look tomorrow and I'm going to make a change? What did he tell you?
We bounce in and out of different options on what we're doing, and so he kind of he moves things around. Well, about every 4 or 5 months, something changes.
Here's what I trust. This isn't Don and Tom. This is decades of academic work done by people who have won Nobel Prizes. They say your returns basically come down to how much of your money is exposed to stocks, how much of your money is exposed to value stocks, small stocks, and a few other factors, if you will. That's part one. The other part is the blend between stocks, the riskier things, and bonds. There is no timing. There is no moving in and out of markets. There is no guru who can see the future well enough to say buy or sell. That simply, the research says that's exercise in futility. You end up spending more. So the answer is no, we would not agree with that approach. So then you're saying, so what would I do? Yes, if you're going to do this on your own, we would recommend low-cost, widely diversified index mutual funds. I recommended this morning at a talk I did, the Vanguard Total World Stock Index, which holds 7,500 companies. It's a very fine fund. It does it at an extremely low cost. I can guarantee it's less than what you're paying your advisor today. Guarantee that. That's a no-brainer.
By a huge margin.
Yeah, and then you would simply, if you're going to do this on your own, you balance between that, the stock fund, and a bond fund or several bond funds. That would be the mix, and you wouldn't care what was going on in the world because your portfolio should be built for how much you need to make and how much volatility you can take. Is that too much?
Nope. I understand completely, and I'll be headed that way.
All right. Can I have a question, though? This is just abject curiosity. In your buckets in the past, what did you have in your bucket? What kinds of things?
Well, we've had mutual funds in the past, and he set up funds of his own where he moved. Had lots of things that he put together as a fund that we got into. We've also been invested in gold occasionally. Right now he has a lot of us in Tahoe. If you're familiar with Tahoe.
As in
Lake Tahoe?
Lake Tahoe? I mean,
no, it's a Tahoe. I think it's a gold mining situation. Where they invest in gold mines and that kind of thing.
And I want to say something there just very quickly. That in our mind, actually, in that's not
Tahoe
an investment.
Resources.
Yeah, that's a speculation. In other words, you're hoping, you're taking a flyer. That's the old expression. Taking a flyer on this one, hoping to make big bucks. That's pure speculation. We just got off the phone with a guy this week who's got a bunch of it in an oil drilling stock. He's hoping for the same thing.
The other reason I asked that question was, do you have any non-traded REITs? Because that was one of the very popular bucket items that people put in these buckets.
And unfortunately, I can't answer that question. I don't know.
Okay.
You have anything
Be
that says
wary
like
of those.
coal on it, or anyway?
Yeah.
Well,
no,
I can tell you,
I know right now.
Your advisor's advice is not supported by any academic evidence anywhere on the face of this planet. It is all emotionally based, and that kind of a management style eventually, it's usually very ineffective and often disastrous. So you're on the right track.
That's what I was thinking, that maybe I should be going in another direction after I heard about what you had to say. And of course, the Tahoe thing that he was talking about is a fairly recent thing for us. So,
I got to tell you, I'm reading about Tahoe right now. It scares the living daylights out of me. Good luck. Thanks for the call.
Tom and Don are talking real money.
We hope you're enjoying one of the more unique podcasts out there, but we want to remind you that there are other tools we offer to help you get educated about what we call real investing. We publish Real Investing Journal both as a free online version and in an inexpensive printed magazine. You can check those out at realinvestingjournal.com. Then we offer classes, most of which are in the Seattle area, but now we've got a couple of the classes that we taught at Retire Meet online for free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com, click on the video link. And finally, we rarely mention it, but we also manage wealth for hundreds of folks and well over $250,000 through our fee-only 100% fiduciary investment advisory firm, Vestory. We manage money just as we talk about it. We always put our clients first. Our fees are low, and we educate you on a regular basis. Go to Vestory.com to learn more, and you can take our free no-obligation risk quiz to understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
Reality radio for a really great future. We're talking real money.
We are, and it's important stuff we talk about here on the show, how to get your life in a position where you don't have to worry when you get to retirement. You're feeling a lot more secure. You're not getting ripped off along the way. You're not being taken advantage of by get-rich-quick schemes and market timing and stock pickers and people who think they know the future. Come on, you can't know the future.
And, I mean, so we were just talking to Ray about his investment in Tahoe. That could only, I just took a look at it, that's pure speculation. I mean, that is not an investment.
Oh, yeah. The company founded in 2009.
Yeah. I mean, this is something you're hoping will hit. I mean, and if he does, I guess the advisor looks like a genius, right?
Yeah, that's the whole idea.
That's exactly the whole idea.
That's the whole idea.
So, and we started the program, and we were talking about
so much bad stuff out there, Tom.
Well, and the fiduciary, since yesterday was Fiduciary Day, which means nothing to nobody.
Fiduciary Friday.
Doesn't mean anything to you listening, because what does that mean? Well, it's supposed to mean that the advice you now get on your retirement assets, like your 401k, your IRAs, Roth IRAs, that kind of thing, the people giving you that advice have a legal requirement to put your interests ahead of theirs, but that's not even the case. A, because the rule basically really still doesn't go into effect until next year. But B, they can have you sign another piece of paper that says, I'm selling you this thing that it might not be in your best interest, but yeah, I think it makes good reason for you to go ahead and buy it.
And there's an important concern this year. The rule went into effect yesterday, Friday, June 9th, if you're listening to this at another time. Friday, June 9th, the rule went into effect. They are supposed to, now, if they give you advice in an IRA or a 401k, not 403Bs, by the way.
I know. That makes, because that's not a retirement vehicle.
It is, and that's where some of the worst advice lives. Hello, Valak. I'm talking about you.
More
Valak.
annuities there.
Valak, annuities.
Good
right.
Lord.
Quit selling people annuities. Anyway. What was I saying? Oh, the rule, while it went into effect, it's not enforceable.
Yeah, that's what I was saying.
Until January.
Yeah.
So don't think that anything big is happening.
But I promised to bring this back around to the question about returns, right? About, gosh, I should be making more money. Because it always comes down to that. People always call it, well, I've had my money with Bob for 10 years. I don't feel like I'm making any money. And my answer is, that doesn't mean anything to me. I have no idea how it's invested, et cetera, et cetera. But our friend Jason Zweig wrote about this today, that just because this new rule goes into effect is going to still the idea that you are going to hire someone because they say, I'll do better than your current advisor, that's not a good rationale for making a swap.
Right.
The rationale is exactly what Ray said.
Fees?
Yeah.
And scientific backing.
Style. Yeah, no, it shouldn't be, I'm going to hire you because you're going to make way more money than they are.
I just got a tweet.
Oh, uh-oh.
I haven't been tweeted during the show yet. This is my first show tweet. What is this Tahoe investment? Just curious to read about it. It's not anything I'd get within 100 miles of. Whew, good. Thanks, Rick. I'm glad you won't get it. It's a gold mining stock. Right. It's a gold mining stock. Out of Reno, Nevada.
I don't know where it's traded. I didn't get a chance to look at where it's. I think
I tell you that
might be NASDAQ, but it might be Pink Sheets. I mean, this is a pretty small company.
Let me look at that up here. Let's see. Tahoe Resources, the new leader in precious metals. It is traded. Oh, it's a 3-digit ticker.
Oh, okay.
It's 4-digit ticker traded on the NYSE.
There you go.
The NYSE.
Yeah. Okay.
Tahoe Resources. It's a legit company. I'm not saying it's an illegitimate company. It is a legit gold mining company, but that's still a gamble.
Yeah.
I wouldn't suggest you invest in a legit manufacturer of iPhones. They're a legit company, but I wouldn't suggest you buy them.
Unless you're buying them
by the phone.
Unless you're buying them by buying a lot of others, too.
Right. And let me tell you,
own Tahoe. We probably own it.
I was just going to say, Tahoe Resources should be in a globally diversified portfolio. It's just that it will amount to far less than 1/10 of 1%.
We don't go buy it as one company. We buy it as part of a portfolio of thousands of companies. Big difference there.
Is your advisor acting in your best interests as a fiduciary now that the rule is in effect but not enforceable? We'll try to help you figure it out.
Tom and Don are talking real money.
Quick break. In addition to our Talking Real Money podcast, we have a few other tools to help you gain a better understanding of the concept of real investing. Of course, there's Real Investing Journal. That's offered in both a free online version and in an inexpensive printed magazine. Explore both those options at realinvestingjournal.com, realinvestingjournal.com. Then we teach classes. We offer most of our live classes in the Seattle area because that's where most of our offices are, but most of you live elsewhere. That's why we're now offering the same classes that Tom and I taught at Retire Meet online right now, free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com and then click on the video link. You'll see them right there. Finally, we also manage the wealth or the budding wealth of hundreds of folks like you through our fee-only 100% fiduciary investment advisory firm, Vestory. You'll find our approach is consistent with the message we've been sharing for decades. We always put our clients' needs first. Our fees are among the lowest of any non-robo advisor, and constant education is one of our core values. Visit Vestory.com for more information on our firm and to take our free no-obligation risk quiz to better understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
And if you don't have the job you want that you need to contribute to your Roth, and you're interested in the investing business, you'd like to get started in this business, or you've got some experience in this business, and you're looking for a firm that's actually going to tell people the truth, you'll have to work for a living. I'm sorry, that's part of the deal, but we're looking for client services people at Vestory because Vestory is growing. Just go to Vestory.com, and it's right there at the bottom of the page. Go to Vestory.com, Vestory.